Hello everyone, I'm Jiajun Chen. Today I'm going to present the stock report for BHP. I'm going to present the table of content first. First of all is the background information for BHP, and then is investment thesis, and it's a valuation for BHP, and the end is risk for BHP. And I'm going to talk about the background of BHP first. It is a metal and mining sector industry, and for year 2019, the share price is $38.92. And the LTM financials is $45,139 million revenue and $23,165 million EBITDA. And the market capital is $118,570.7 million. And the product for BHP is the iron ore, the coal, and copper and petroleum and potash. And base case projection, the revenue growth falling between 0.1% and minus 2.2% due to the impact of virus. EBITDA margins will increase due to the well position on the cost curve and strong balance sheet. And then is the investment thesis. I recommended buying BHP because it is undervalued, and its price could increasing to $42 in December 2020. First, the threat of COVID-19. The impact of COVID-19 is little on mining sector. BHP stated that there was no material interruption to customer shipment from the virus. That implies that the reducing of company share price should not be too much. Also, the COVID-19 impact the price of material is little. Iron ore down only 7% and hard coking coal up 6% since the equity market peak. It is proof that the impact of virus is little on BHP lead to undervalue. And the second is demand of steel in China. According to JPM's Economic Team Report 2020, the situation in China appears to be improving. This report shows that recovery in China is taking place on several fronts. First, housing daily transaction further improved. Coal consumption of 6 major power generators is picking up pace, and then highway congestion has reached new highs since Lunar New Year. So local government have accelerated the pace of infrastructure investment. This has implied the GDP growth in the second half of GDP in China. And also China is the biggest importer for the material. It means that the demand of steel will increase in following time. The share price may go up with this assumption for China recovery. And the third one is compelling valuation metrics. BHP exposure to high quality expandable asset that well positioned on the cost curve. We can see the data on the right hand side. The ROIC is stable between 2019 to 2020, which is 17%, which means BHP have high quality assets. It also proved that BHP has great position in cost curve. Based on different ratios, it shows that BHP have strong balance sheet, which result in shares should be rise. And we can see the data there. The gearing minus net debt or divided by net debt plus equity is quite stable from 2018 to 2020. And then is the valuation summary. This data is a sum of parts DCF analysis. The price target is based on the MPV by JP Morgan report. It is rounded up to nearly $1 and using 9.2% WACC as the discount rate. Target price is $42.38. Then is the risk factors. The risks for this stock pitch include: first, adverse or more favorable outcomes in commodities and currency, production and CapEx relative to our forecast. And the decreasing of commodities will lead to the decreasing of revenue. And the second, changes to tax legislation and other operating conditions. The tax and legislation and other operating conditions, if they change, you will lead to you have some impact of the company operating. And the third one, a divergence in the relative performance of petroleum and mineral prices. And that's it. Thank you for watching. Do you have some question for me?
Yes. So how will the third risk factor impact the BHP?
Oh, the divergence in the relative performance of petroleum will have some impact of the company operation. So it needs to be stable. Thank you.
Okay, thanks.